Hi, everyone. It's John Pocoroba. It's time for a general market update. I decided to do another update this weekend because there's been a lot going on in the markets. So as a reminder, I'm an amateur individual growth stock investor, and this presentation is by Rain King LLC, and I'm not affiliated with IBD or MarketSmith. Okay, our agenda for today is to talk a little bit on a quick update on the January effect. Then we're going to spend some time on the concept of change. And then, as I mentioned in the last video, we're going to talk about January sector and group rotation and finding the leaders and how to do that. And then we'll go over just a couple of charts. So the January effect update. Again, the three components are the Santa Claus rally, the first 5-day indicator, and the January barometer. We talked about this before. So here's our update. The Santa Claus rally, as a recap, was positive. Total was 0.83%. So that was got a gold star there. The first 5 days of January, the tally's in, and the gain was 1.39%. And so that's really good news. It has a very, very accurate ratio. If this is positive, it usually means there's a good chance the entire year will be positive. And the January barometer is the results of the full month of January being either positive or negative. So that's still out. We'll see where we go from there. So we have positive sign on the first two. And if we can get all three, that would be the January trifecta. And again, if we get the trifecta, it has a 90% chance of being effective as a positive year for the S&P. And if we do get that, the average gain in those years is 17%, which is very encouraging. As I mentioned, January tends to be, it's been weak the last 20 years, but in a pre-election year, as we have this year, the results have been pretty positive. So let's get into the first concept I wanted to talk about, and that's change. So the importance of change, a very experienced trader a number of years ago, when they said, why do we have to look at the market every day? And they said to me, well, you have to look for change. You have to look for change of what's going on in the market. And so when he explained it further to me, we were talking about change, meaning change in the trend of the indices. We're looking for change in the leadership of the market. We're looking for change potentially in a stock's behavior, an individual stock's character, behavior. We're looking for change. And we're also looking to the reactions to the news. We're looking for change. So at market bottoms, one of the things that I look for, on top of the 5 things here, one of the things that's really become apparent the past 3 weeks is breadth. And one of the things I look at is 5-day breadth struts. A lot of different ways to look at breadth. So I'm going to share just what I do. There's a lot of other valid ways to do this. A 5-day breadth thrust is something that, if you're really interested, you'll hear it called the Whaley breadth thrust. Wayne Whaley was the one who came up with it, based on his 2009 research paper called Planes, Trains, and Automobiles. Pause your video player, go to the link, you can get the details of this particular Whaley indicator of thrust. Also a good paper in 2002 from Lowry Reports that you might want to take a look at. I've got the link. Now, major bear markets, which is the context that we're in, that are, the S&P is off 25% or more. These types of thrusts don't happen too often. Sometimes they're every 5 or 10 years. So the concept is, a breadth thrust is like a rocket that needs thrust to get into the Earth's atmosphere. The initial rally needs enough thrust to push it past levels of resistance and to get through downtrend lines and former failed rallies. So how does it work? So what the Whaley breadth thrust is really about is 3 components. You look at advancing issues versus declining issues on the New York Stock Exchange. We look at up-down volume on the New York Stock Exchange, and the price thrust, 5-day price thrust on the S&P. I use wallstreet.com, go to their market diary. This gets published every single day. So I'm looking at advances and declines. We're looking at advancing volume. You can also look at new highs and new lows. So the key is for this 5-day breadth thrust, when it does trigger, the 1-year return is positive on the S&P. So without getting into great detail, it's a 5-day running total of advancers versus decliners. And if you get a 5-day total that is in this case, greater than 73.6%, it's a meaningful signal. The up-down thrust is a 5-day running total of up volume over up and down volume together. And a 5-day thrust would be over 77.8%. It's a meaningful signal. And the S&P, if we get a price thrust, which is a 5-day running percent change in the S&P, if we get a 10-day increase in the S&P over 5 days, that's really meaningful. Since 1970 to 2009, it only triggered 12 times, but they were noteworthy. So on Thursday, January 12th, we had triggered these two thrusts, the advanced decline and the up-down volume. So it's worth taking note of. Now, we talk about change. So let's take a look at things we're looking at. Here's a weekly chart of the Dow Jones Industrial, which has been acting stronger than the other indexes. But look how the 40-week moving average has been a downtrend. And this black line is the 40-week. You can see how it's contained all these rallies and rejected numerous times. But we actually rallied through the downtrend line and the 40-week moving average, and we actually pulled back, and the 40-week became support in the Dow. That's changed. This is significantly different behavior than what we saw here, here, and here. Noteworthy positive change. On the right, this is the New York advanced decline line. And you'll notice that the advanced decline line is thrusting higher, and it's actually leading the S&P index. The advanced decline line has actually exceeded its December highs, and we're still waiting for the index to catch up. So again, under the surface, things are improving. Change on the NASDAQ. We talked about this a little bit at the last meeting, and we'll just recap some things that are continuing to show encouragement. The advanced decline on the NASDAQ, again, has been thrusting higher. You'll notice that we've exceeded the December high, and also the percentage of stocks above their 200-day moving average, we've exceeded that. Yet the index, you'll notice, is still below its December swing high. So the broader market, as measured by two of these indicators, is showing us that there's definitely some positive things that are happening under the surface. If you look at the NASDAQ on a weekly basis, again, the 40-week moving average in black has contained these rallies, these bear market rallies, once, twice, 3 times. So the test is ahead. We had the October lows on October 13th. We had the retest of the lows, and now we're prepared to make another run at the 40-week moving average. So this is very important to see what happens as we approach that. Hopefully we get some more positive evidence. This is the NASDAQ weekly net new highs minus new lows. So we get the net number. This is a weekly chart. And again, significant change to view here. Look, the weekly net new highs was 102. This is actually the highest level of net new highs on the NASDAQ since the market top way back in early November of 2021. This is the highest reading. That's noteworthy change. We'll see how it plays out, but it's certainly encouraging that the broader market is improving. So let's move on to January and the concept of sector and group leadership merging in January. So the idea here, the concept is institutions have a fresh start in 2023. Everybody starts out at 0% year-to-date gains. Now, fund managers, their performance is benchmarked against some of the major indices, such as the S&P 500. We know that these institutions have extensive research teams. They have teams of analysts that study companies and study the market. So they have lots of research. Now, if you're a fund manager, you're more likely to make a risk-on bet at the early part of the year. So hopefully, if you get the sector right, you get the group right, you get the stock right, you could outperform. So fund managers are more apt to take risk early in the new year. So we want to look at volume clues to help us with that, and we want to look at relative strength to try and find where are institutions putting their money. Covered this last time, but again, 37% of a stock's price movement is directly tied to the industry group, and another 12% is due to the strength in the overall sector. So therefore, based on IBD studies, almost 50% of a stock's move is related to group and sector. You can pause your video player. Here's a couple of basic screens to use when you're trying to find leadership. And once you run your screens, you're trying to do some sorting. You're trying to say, what are the groups that are dominating the list? How many names are in the list to show how strong it is? And you might want to look at the relative strength line. But you want to keep looking at this in detail. And I'm going to show you some more lists you can use to help you find what's happening in the first 2 weeks of the year. Last year, when we did this exercise on January 16th, which happened to be 1 year ago, the clues were, you can see the surge in oil and energy stocks, metals, and industrials. And they were actually pretty good indicators of at least the first half of 22, where the leadership would be. So if you have MarketSmith or other software, I'm sure you can just look at groups and just run a very simple percentage of change year to date, which has happened over the previous 2 weeks. So you can just run that, and that immediately tells you what's been outperforming. That's one way you can start to look at what groups should get your attention. Next, what you can do, and I do this, is when I run my group screens, I want to look at what groups are actually moving up the group rankings. And I do that by looking at 6-month group ranking, 3-month group ranking, and then where was the group ranking last week. So an example here is leisure travel booking was ranked 196 6 months ago, but it's moved up to 183, and that's moved up last week to 38. So you can see this group is on the move up the charts. Getting above the top 50 is really encouraging. And you'll also notice that there's 22 stocks, actually 19 stocks in the particular group. So this is really encouraging action to take note of when you're trying to find the leadership. So when I run some screens, I ran these in MarketSmith and just put these kinds of group charts together. You can see here's the groups that came up showing some real strong strength. And again, you look at, here's January 1st, and you can see all of these groups have significantly turned up in terms of their relative strength. So we're going to go deeper on this, but here's the names of those groups. Let's go into these. So the other thing you could do is run a ROC study, and ROC stands for rate of change. So I just set the market low on October 13th as the starting point, and I want to see how these groups have performed since then. So from October 13th, you can see the performance of these particular groups, in a tabular form up here in the upper left, and you can see them graphically on the chart. You'll notice when I draw the box around the first 2 weeks of January, you can see this significant turn upward in this group, which that's really, really noteworthy. That's change. So now if we delve down into the groups, one of the first group on that list was leisure and gaming. So then you can go into the leisure gaming group and say, well, what stocks are performing? So here's a couple of the stocks that you can see. Again, got the box around the first 2 weeks, Melco and Wynn and Las Vegas Sands and a few others. And here's the group. So you can see these stocks are actually outperforming the entire group. So that's what you're looking for, the strongest stocks. Here's travel and booking, which made the list. You've got booking.com. Expedia has turned up since January 1st. Trip.com. Again, you're trying to find the strongest names within the groups that are already showing strength. Surprisingly, building, residential construction, the home builders have shown a tremendous amount of strength at the beginning of the year. This is really interesting because they're very interest sensitive. You say, well, how do the builders go up when we have mortgage rates at 7%? How does this happen? Well, the market is a discounting mechanism. So the market is looking 6 to 9 months out. And if the builders are showing strength, they could be signaling that the market sees that in 6 to 9 months, interest rates will either be flat or start to decline. So we're seeing strong action in the builders, and there's some of the names. The retail apparel shoe also is showing some significant strength in the first 2 weeks of January. But here's a couple, 4 or 5 names in that group that should be brought to your attention that you might want to go deeper in your research on. And the last one I'll showcase here is mining gold and silver. You'll see that the group is strong, but you'll see there's a couple of stocks here, AU and AGI and WPM, that are showing significant outperformance. What's noteworthy about gold and silver is gold and silver has been running very positive all the way back since November. So the groups have been moving for a while, and they're continuing as we get into January. That's noteworthy. So the summary of this exercise, and again, this is not all inclusive, but it gives you things for your watch list. We're trying to find the leaders. So we've got these names in gaming, residential builders, travel and booking, apparel, shoe, mining, gold, and silver. Now, this is not all inclusive because there are other groups that I could be putting on the screen as well that you might want to look at. Steel is acting really well. Oil and gas field services has names that are acting very strong. And some of the machinery, construction, mining groups containing names like Caterpillar are also showing strength. They've been coming out of breakouts. So again, this is how we find early leadership. We want to continue to track this for another couple of weeks to see if there's really traction to help us with making decisions about where do we make investments. So the charts of these emerging leadership, I just pulled together a couple. This is just a chart showing here's Las Vegas Sands. You can see this has been very, very strong in the gaming industry. Crocs, you can see the relative strength line as a blue dot, which is really, really strong. Yamana Gold, one of the gold stocks, is just broken out and showing blue dot relative strength in MarketSmith. And there's one of the builders. DHI Horton is coming out of a very large cup with handle. Now, I will note, this is important, all of these stocks are acting very strong, but don't chase extended stocks. Many of these are extended, like Las Vegas Sands, et cetera. So you don't want to be purchasing those stocks now, but they absolutely should be on your watch list to find appropriate entries as you go through your lists and do your screening and finding your stocks that might be potential purchases. So the summary is, going forward, hopefully you've gotten a little bit of sense of what I mean by this concept of change. We're always observing the market for change in the internals, change in the indexes, and then also we're looking for change in individual stocks. We're looking for leadership. We want to be fishing in the right pond at the right time. So hopefully we've given you some great potential areas for you to go deeper on when you're looking for new stocks. Now, many of these names are extended, so I'll say it again, do not chase extended stocks. So while we are seeing improvement, some of the action has still been fairly sloppy, a little bit of volatility. So we want to be moving incrementally into the market as we see more positive evidence to support our decisions. If our decisions are not working out, there's no reason to put more money into the market. So it's an incremental process. And also stressing, be selective. Insist on good setups. Just because the market is moving, don't get sloppy and just put your money in sloppy setups. Make sure they're good, they're tight. And ideally, you'd like to see more volume come in to give you more conviction that the institutions are also agreeing with your analysis and what names deserve your attention. So I'll leave you with this update with really a reminder that everybody was extremely bearish at the end of December. So when everyone is thinking one way, someone is not thinking. That's why we observe the market, looking for change, and we also want to look for new leadership, and we've shown you today how to find it. Thanks for joining me for the general market update. Today's January 16th. Here's where you can find me on Twitter, YouTube, and email. I look forward to talking to you soon. Any comments or suggestions, please give them to me, and I hope you're enjoying the holiday weekend.